Hey folks, today I want to prove you that dollar cost averaging strategy really works. But instead of just buying SP 500 index or SPY ETF on this index, we will be making or doing another way. I want to buy the biggest company at the first day and then going forward, just buy a smaller one, smaller one in terms of market capitalization. I will show you a site where I got the list, but you can find it yourself online. And for sure, because I'm DevOps engineer and programmer in the background, I use ChatGPT to help me with this task. So I just queried it for a couple of days. So it gave me a few ideas. And yeah, don't expect the code to be perfect, but at least it does what I wanted to. So every day we will be just buying one stock. And if you are afraid that you won't have a lot of money, I'm decided to spend like $10 on each stock, which is available to buy on eToro. I mean, I didn't check if all of these companies traded on eToro, but the idea was just kind of simulate that approach. And on that platform, you can buy as little as $10 worth of company stock. So that's the idea. Because first time when I just checked buying just one share of a company, it required quite a lot of money. I think for this year, it's something like $17,000, or maybe it was yeah, maybe it was even more. I remember a number of $36,000, but to be honest, I don't remember. Is it just for this year, or I tested since the beginning of the previous year? To make this approach more affordable, I decided to, okay, let's spend just $10 every day, and it will require you just about $250 per month on your investment. So yeah, as I said, each day we will be investing $10 in stock, and we'll see how it goes. Just to make it more exciting, I will go line by line through the code and explain what it does. So if you want to change it yourself or improve it a little bit, or just have some requests for me to improve the code, yeah, feel free to leave the comment. But without further ado, let's get to the code and I will show you. So here is the code. I will be running it line by line just to make it easy to understand, because I just tried to write a video or create a video and explain without running the code. Even for me, it's just hard to understand. So let me just show you, and I will do it line by line. So first of all, we will import all our libraries which are needed to work with our strategy code. So requests, we need to query website and get price data and ticker data for companies we are interested in, basically the biggest companies in the world. Beautiful Soup is another library which is used to parse data like from HTML and extract and manipulate all this stuff. By finance, we need to get historical prices for tickers we are interested in. Pandas, it's a most known library which is used to work with data frames in Python, and data frames, it's kind of table, so it's really useful and easy to work with format. And daytime, we need to work with dates, because as I told you, we will be getting the data, or stocks from the specific date. So you need to provide date you want to start as part of the simulation, and I will be using the 1st of January this year, but I will also I will also show you results if we start like 1st of January last year or a year before, and you will see that in all these cases we are profitable. Maybe not much, not like 300% or something like that, but at least it proves that the whole strategy is still profitable. So let's move on. So I imported already all the libraries, and first I need to initialize empty list to store our tickers and prices. So let me do that, and actually I can do this with the next block, and let me just explain you what it does. So start data, this is a date when we want to kind of simulate the strategy. As I said, it will be 1st of January this year. Days, we need to calculate the difference in days between this date and today, and this formula does what it is, what is I just said. So we take today minus start date and get property of days, and if I click or select days variable and click shift enter, you will see the difference between like start date and today is 220 days. And month, I used that variable when I tested the initial strategy, when I, instead of buying like a $10 per share, worth, I bought just one share every day, but unfortunately it will require you a lot of money. I remember a number of 36,000, but I don't remember if it was just for this year or I tested from the beginning of the previous year. So instead I decided to, okay, let's just test the simplest possible strategy, and also most affordable for everyone when you buy just $10 worth of stock and just move on. And also it's a bit easier to predict, because some of the stocks cost $8, another one is $3,000, like Booking, for example. So your monthly spendings might be really different, and when you just buy $10 worth of stock, it just easy to predict. You calculate how much days, or sorry, how many days the market is open during the month, and it's usually like 21, 22 days. I don't know, maybe maximum 25, but you got the idea. You don't need more than $250 per month for this strategy. And let's move on. And pages we need, because on the website where we'll be grabbing info from, there are only 100 stocks per page. And let me show you. Here is the website, call it company's market cap. And if I scroll down, you will see the number is you will see the number is 100, and the button click next. So here is another 100 companies, but you got the idea. You can click several times. Here are 7,000 and something companies listed, but we will be testing for just a couple of years, so we don't need probably more than 1,000 companies. So yep, and when we have pages, we can just create a simple for loop in Python to iterate over this kind of range, and then get first page on the first iteration. As you can see, we just put this variable page here, and we will at the first time we will get 100 companies, and then we check if the response status code is 200, which means is okay. For those who work with HTML development, they know. And then we create a beautiful soup object, which will be our HTML parser. And then we need to find the table on that page. I already spent some time digging around with classes, with all that stuff. So basically, this is how it's done. And once we found it, for each row, as you can see, this is a nest for loop. For each row, we need to get the ticker. Let me show you once again. Here's the ticker, AAPL, MSFT, and so on. And the property, or function called getText. This is how we can return this data. I will be running this for loop just like by selection, because I can show you one by one, but you will see. Just give me a second. Another thing I wanted to mention for you to understand, and yeah, it might be not really fair strategy. I'm not taking like blindly all the companies, but I'm really taking, as you can see here, DE and PA, US companies, and also those which are traded on Germany exchange and in Frankfurt usually, and DE just like a country code, and PA it's for Paris. Yeah, I'm not sure why, but like the country here and the city here, but it doesn't matter. I mean, I explained to you the whole idea, because as you can see in China or South Korea, companies are not listed as a ticker. They use it as some kind of company code, and then use a different suffixes. So it's .ks, which is South Korea, and let me find you another example. Let me see. For example, for India, there is .ns. So just to have better understanding of what I'm investing into, and because of China supports Russia, so I don't want to invest in those markets for a foreseeable future. I think like 50 years, as long as I'm alive. And yep. So that's basically it, but you can add some filters here or remove. For example, you may omit any companies or skip any companies which traded outside of the US. So basically you will need to check if there is a dot in ticker. It means the company traded not in US but somewhere else, and you want to skip these companies. But for the sake of the diversification, as I told you, it's better to do not invest into a single market, even different sectors or different industries, but it's also better to invest into different geographical locations, and yeah, don't put all your money in one basket. And also, what next? Yeah, if these conditions are met, continue means we basically skipping and not using this company, so we won't be calculated if there is a dot in ticker, and we don't end in with .d or .pa. So basically that's it. And if this condition is passed, we just going on, and then we need to extract price from this column, and let me show you. Here is the price, but there are some companies where price is really huge, like over $1,000. I'm not sure if, yeah, Hermes, for example, as you can see, the price is over $1,000, and here is a comma, which is kind of delimiter, and for Python it's something that it won't understand, so we need to cut this comma, and that's why we like use two functions. One is strip to strip this dollar sign, another one is replace, but technically I think strip might be, I'm not sure, I think strip is just use it if it's the first, like at the beginning of the string or something, doesn't matter. You can use replace instead of strip, but in the end you will get the price without any commas or dollar signs. And after that you can append to the list ticker and the price, so it will be key value pair. So let me show you what we will have here after running this block. So okay, that's it. And let me prove you that we got what we wanted to. If I select ticker prices, you will see, yeah, it kind of mess, but yeah, you got the idea. Probably I should run it in built-in kind of interpreter, like from the bottom. It shows structure a little bit better than here, but anyway, you'll see it later. So yeah, we did this part. Yeah, we did this part, and now it's time to create a portfolio dictionary and define the investment per stock. Here is $10, but as I said, you might want to invest more if you have more money, or plan to invest more money per month or per day. Here is per day strategy. And now it's time for another cycle to go through the ticker prices and check, first of all, if the date is not today, because we have more stocks in the list than days between the starting date and today. So that's why we need to add this check. So if we are not reached today, we are moving on. If yes, it will break the loop and continue. If no, we need to download historical data for given stock from the list. So it will take a ticker and then use start date, which is like at first will be our 1st of January in our example, and then it will download for 5 days. The idea behind to download for 5 days instead of just 1 day, let me actually show you, it will be easier. So instead of ticker, I will just use AAPL to show you what I mean. So if I use this and then show you what we have here, and as you can see, the price we have, which is $130 and some cents, it's not for a 1st of January, it's a 3rd of January, but this price open zero. So if I do price open zero, it means like in programming, zero means like 1 or first. So usually list or arrays starts their iteration not from 1 like in usual people you use it too, but in programming most of the things started from 0. So 0 means first line. And yeah, this way we will get the purchase price. So on the 3rd of January we bought Apple stock worth of $10. The price was $130 and this thanks. And here is number of shares. So if I do this and purchase price, sorry, I didn't assign this variable, so once again, as you can see, we bought 0.076 and blah 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 worth of Apple at that date. And then we need to add ticker to the portfolio. So let me run this as well, so and show you what we will have here. So as you can see in portfolio, we have just one. And let me see if I have ticker. Now I think here I miss it, because ticker should be Apple. Ticker should be Apple. Yeah, and this is the last ticker, so yeah, the ticker should be something like this. Yeah, instead of doing that way, I had to assign ticker first and then call it. So if I run this command once again and then show you portfolio ticker, and yeah, you will see Apple, and then oops, once again, yeah, you will see that ticker is our variable AAPL. So if I do this, for example, manually to prove you, come on, that should not be here. If I do this AAPL, if I just show you what we have in our dictionary, you will see that purchase price is $130 and number of shares we bought is this number. But let me clean up all this stuff. So and just move on with explanation. And yeah, once we bought this, then we will issue a line which is printing our date and the ticker we bought, and then shifts our date to the next date, because start date currently is 1st of January. As you can see, is date 1st of January, but when we run this, we will take this date 0, which was, let me show you here, date 0 means 3rd of January, so it doesn't matter, just add 1 day to the 1st of January, because it will be 2nd of January and we already know that market was closed. So we need to take this date and increase it by 1. So on this line, what it does. So let me show you. And now start date is the 4th of January. So yeah, I think you got the idea. Now let me reinitialize the portfolio and rerun all this cycle again, and you will see what it does. So it goes like ticker by ticker, and you see the date. And also if I scroll up, you will see that it is keeping weekends. So for example, between 6 and 9 was weekends, and then same was between 13 and 17 and so on. Now we just need to wait until it grabs all the data for tickers we need. And yeah, sometimes you might see an issue. I'm not sure if it will be show up here one, but I saw a few in the past when ticker was not available in Yahoo Finance. So just some kind of, not a bug, but you need to double check what the ticker in Yahoo Finance and the ticker on that website that we are grabbing info from. So it might be a little bit different notation or something like that. So yeah, okay, we got our prices. Now we need to create data frame from that portfolio and basically create columns, call it purchase price and number of shares. And this line is thus. So if I show you data frame, you will see that the current structure is our index is our ticker. This is a company ticker, and then two columns called purchase price and number of shares we bought. Now we need to create a dictionary from the ticker prices list using dict comprehension. So this is what we have here. Probably will be mess. Yeah, this will be mess. But anyway, I will show you in a better format later. So, and now we need to create another one column, because currently, as you can see, we have purchase price and number of shares, but we don't have a current price. And the current price is listed on that website. As you can see, price here. So when we initially parsed this website, we grabbed the ticker and also price, which means current price. And Y Finance use it to get historical price. But let's add a current price column to this data frame and show you how does it look like. So as you can see, we also have a current price, and one last column is price change. So for us to understand which was a good investment and which was bad. So run this line, and now we will see, I will show you later the full table, the price change between our purchases. Because for example, Nvidia, we bought at the price of 155 and current price is 427, which means the price jump is 175%, which is a lot. But there are also some negative investments. For example, ticker MO, we bought it higher than it is currently traded, and the price, percentage difference is 1% and something. So yeah, that's it. Now we need to let me remind it. Yeah, rename the column. So instead of index, it will be ticker. So let me show you. And also it will change the index to ticker and also print our investments. That's what I promised to you. So now it's easier to see what we bought. There are no dates, just a ticker and purchase price, number of shares we bought, current price, and price change. But as I said, it's up to you. Programming is creative thing. We can add P&L in dollars here or do it differently, just the way I did it. And yeah, that's all our investments during this 220 days. I mean total days, but number of stocks we bought a little bit less. So let's see how many. And total stocks invested, actually it will be printed later, but let's double check here. So yeah, it's 149 stocks we bought, which means we spent almost $150 on our investments, taking into account that we bought $10 worth each of stock. So now let's take a look at the total investment, total invested, yeah, as I said. And now we need to get the current value of our portfolio and also portfolio change in percentage, and I will show you in a bit. So here is all our printings, and yeah, not really readable, but let me do it one by line, so maybe, because it looks like a mess. So okay, first one, number of stocks invested into 149. Let me just add a few enters so it will be easier to understand. Total invested, yeah, which is clear because we bought $10 per stock. And current portfolio value is $1,639, which is more than our initial investment. And the price difference, as you can see, it's a 10%. So if you follow this simple strategy, just buy and stock every day for $10, you made 10%. And this is usually more than usual SP 500 price rise, because average year to year is about 8% or something like that, but now it's just middle of year, And yeah, that's it about the strategy. It's about 100 lines of code. It's really simple, and let me prove you that it will work even on the longer time frame. So let's start from the beginning of 2022 and run the same code. So I will close here and just right click, run in Python terminal, and just wait until it grabs all data and print all table, and you will see how it works. But yeah, I found this bit interesting approach, and yeah, feel free to give me any comments or ideas. I might try out and also show you how does it work or how it will work out. And yeah, I think this strategy is a bit, I wouldn't say profitable, maybe cooler, because you can pick companies you want to. So you can go to this website, and instead of just using market cap blindly, you can check their performance. And if you believe in one company, because for example, Verizon is going down for I don't know, for a couple of years already, and I wasn't say it was a really prominent company for this decade or even 2 decades. So I would just skip Verizon at all. Nothing against it, but I don't know, I don't see when it will go up really. And this is a market cap, so if we click a price history, so as you can see, yeah, it's going down for a couple of years. Yeah, it might go up, and historically, yeah, it's going down. But yeah, it's up to you. I wanted just to show you an example, because for example, from 2000 till 2020, so 20 years was unable to beat its own all-time high, and once it reached the same all-time high that it was during the internet or IT bubble like 23 years ago, and it went down again. So yeah, it might recover, but they just to give you an example, like a company that I personally would skip. So, and now let's come back to the strategy, and as you can see, the list is way longer. And what's printed, as you can see, we invested in 362 stocks, and it's easy to calculate. It was $3,620, and current portfolio value is 4,000, and portfolio change is 12%. Yeah, not much, but still, as I said, it's profitable. And as I told you, we will check for a previous year, so let's try it from 2021. So here, as you can see, what I told you about, that for some stocks the price might not be available because of the different reasons, like company is not yet traded, or yeah, it might be just any kind of different issue. And basically the script, it just takes the next company from the list if it's not able to grab data for this particular stock. So it won't really affect our investment because we are trying to buy biggest companies in the world. So yeah, anyway, the result will be positive. And yeah, this is another one. Yeah, probably the company or ticker or just historical data doesn't exist. And actually this is another thing, because using free sources like Finance, it won't give you historical data for like 10 years ago or something like that. So for 10 years ago you might get maybe monthly data or weekly data. Like 10 years ago I think it will be only monthly data available, because the more detailed data you need, the more chances that you will need to pay for this historical price. But if you are just testing for kind of daily prices and for 2, 3, 5 years from now, so yeah, most chances that the price will be available. And as you can see here, same as I told you, and funny enough, the portfolio change in percentages is the same, so it's not like rising heavily. We bought since the beginning of 2021 575 stocks worth of 5,750 bucks, and the current value is 64.72, so which means it's 12%, almost 13% increase. And the last one test to show you is the before the COVID, which started usually, or I would say at the end of February 2021, but because we are testing from the beginning of the year, so let's test from the beginning of 2020, because in 2018 the market was going down, and starting from 2019 will be more or less the same as starting this year, because the market was growing and results would be too optimistic, I would say. And this approach I use, it's maybe more conservative or not so optimistic or cherry picking. So let's start from 2020 and see what the result we will have here. So the script is finished to run, and as you can see, totally invested stocks is 766, and appropriate amount of dollars. It's about $8,000, and current portfolio value is about $10,000. And as you can see, during the longer term, if you invest into not just like for a day or two or week or a year, but as you can see, if we started 3.5 years ago, our portfolio change is way better. It's 26%. And I believe if we start to calculate maybe like 5-10 years ago, the result will be even better. And this way you will have a really diversified portfolio and really profitable. And also because you are buying biggest market cap companies, so you are investing into the stable business, not just some fancy IPOs or SPAC companies, which can be really volatile. Yeah, they can be profitable, but they also can easily go down by 95%. I have a lot of examples, and even my own bad decisions, such as buying Nikola company, which is currently down I think over 90%. Yeah, it started to rise recently, but still it's far from the price I bought it, and it will take years to come back to that price, I hope, so I can sell it with profit. But yeah, this is my latest take. Don't buy just some nice fancy stocks. Just go with the biggest ones and just select which one are more understandable for you. I mean you understand their business, and yeah, only after that you can buy. So you can basically not just blindly buy stocks from that list, but take a look at the company, check out their financials, and if you think this is good one, and check what the other analysts are saying. So like spend some time on checking if it's a good company or no, and then if yes, just buy it, because this is a list of just biggest companies. Not all of them are really great or stable in terms of share price growth. So yeah, this is just the biggest companies. So take this into account when selecting the stock you want to buy. But that's it for today. I don't want to overwhelm you with a lot of information. If you have any questions, any ideas, and want to ask me anything, feel free to leave a comment, and I will try to reply as soon as possible. And have a good day and profits, and see you in the next one video. Bye bye.